Hello investors, traders, and cryptocurrency enthusiasts. Welcome to our channel, where we bring you the most relevant news, in-depth analysis, and real predictions about the world of digital currencies. Today, we were going to talk about one of the most significant events of the week in the crypto market. Bitcoin ETFs recorded record inflows following the approval of the so-called Big Beautiful Bill, the major fiscal project from President Donald Trump. According to data compiled by Farside Investors, exchange-traded funds focused on Bitcoin received a net inflow of $601.8 million on Thursday. It's the largest daily inflow since May. The spotlight fell on the BlackRock and Fidelity ETFs, which led the movement with inflows of $224.5 million and $237.1 million, respectively, showing how institutional flow into Bitcoin continues to grow exponentially. And all of this happened on the same day that the main legislative project of Donald Trump's new administration was approved by Congress, generating optimism not only in traditional markets, but also in the cryptocurrency universe. The text includes a series of broad and deep tax cuts with direct implications for businesses and individuals. The approval of the bill, known as the Big Beautiful Bill, marks an important shift in U.S. economic policy. According to official estimates, these cuts are expected to reduce tax revenue by around $4 trillion over the coming years. Despite criticism from more progressive sectors, proponents argue that this money, instead of being collected by the Treasury, will be reinvested into the economy through consumption, investments, and private savings. This has significant implications for assets like Bitcoin, which tends to benefit when there is increased liquidity flowing into the global financial system. With fewer taxes being paid, more capital flows into the market. Much of this capital is migrating toward alternative and non-traditional assets such as cryptocurrencies. In this context, ETFs play a crucial role, offering traditional investors a regulated and accessible way to gain exposure to Bitcoin without having to deal directly with custody, security, or decentralized exchanges. Peter Chung, head of research at Presto Labs, recently explained in an interview that ETFs have solidified their position as the primary gateway for institutional investors seeking exposure to Bitcoin in a secure and efficient manner. This trend is particularly relevant as more pension funds, asset managers, and even mutual fund families begin integrating cryptocurrencies into their allocation strategies. ETFs allow these institutions to buy and sell Bitcoin, just like any other stock traded on the stock market, facilitating high liquidity operations and integration with existing systems in the traditional financial market. Furthermore, the approval of favorable legislation under the new Trump administration is increasing confidence among major institutional players, encouraging them to increase their positions in digital assets. On Thursday itself, BTC briefly touched $110,000. It's driven not only by optimism surrounding fiscal policy, but also by surprisingly strong macroeconomic data. This also explains part of the massive inflow seen in Bitcoin ETFs in recent weeks, especially considering that the domestic political environment now seems more aligned with innovation-friendly policies and technological progress. Nevertheless, analysts remain optimistic about the medium and long-term outlook, emphasizing that both technical and macro fundamentals remain strong. Despite the positive wave, Bitcoin's price faces its usual dose of volatility. The U.S. jobs report showed the creation of 147,000 new jobs in June, exceeding expectations of 110,000. However, on Friday, the market witnessed a slight correction fueled by news that the U.S. plans to escalate the trade war with other global powers, which could generate additional uncertainty in global markets. Arthur Hayes, co-founder of BitMEX and CIO of Maelstrom, recently warned that the approval of the fiscal bill could lead to temporary liquidity pressures, as the U.S. Treasury may need to replenish its dollar reserves. This move could negatively impact risk assets, including Bitcoin, at least in the short term. The strong capital inflow into Bitcoin ETFs clearly demonstrates the growing confidence of institutional investors in the asset, even amid regulatory and economic uncertainties. With Bitcoin consolidating its position as a digital store of value and regulated financial products continuing to expand, the next few months could be decisive for the crypto market. The combination of favorable economic policies, continued development of regulated infrastructure, and growing institutional demand is shaping an extremely promising scenario. Meanwhile, ETFs continue to serve as the main tool for those seeking secure and regulated access to Bitcoin, further reinforcing their central role in the future of decentralized finance. Stay tuned here on the channel to follow all updates, exclusive technical analyses, and complete coverage of what's happening in the crypto universe.